Hi, everyone. Welcome back to Wall Street Silver. We have a very special guest joining us today, Ed Steer, the author of Ed Steer's Gold and Silver Digest. Ed, great to see you again.
Well, thanks for having me on again. I really appreciate it, Ivan.
So Ed, you're all over, I get your reports every week, multiple times per week from your newsletter. And you're all over all the data for the silver market. And I wanted to get your take on the latest withdrawals from COMEX and what people should be paying attention to. This is Michael's Twitter account here. He tracks this data pretty closely. This data is all over Reddit for people to see. It's all over Twitter. And we've seen the registered really declining dramatically out of the registered category at COMEX. What are you paying attention to right now? What are you sharing with your readers and your audience?
Yeah, okay, certainly. As far as COMEX Silver is concerned, I have the link right to the COMEX's website, so it's got all the data from the warehouse, which warehouse is shipping out what and stuff. So if you want to click on that, it's always available. But there's been absolutely phenomenal movement in COMEX Silver. And we're not just talking about recently. I follow the work of silver analyst Ted Butler very carefully, as you know, and the manic in and out activity in COMEX Silver has been going on for, 10 or 11 or 12 years now. And it averaged something between 4 and 5 or 6 million ounces a day, either coming in or going out. So the movement has been absolutely frantic, going way, way back. But as you just pointed out, it's really picked up in the last, 6 or 7 or 8 months or whatever. There's been huge shipments out of the COMEX, silver just vanishing, being shipped out. And of course, as you mentioned, there's a lot of movement between the registered category and the eligible category. And the registered category, it costs more money to store it there. So if somebody decides they're going to move their silver, it's just a paper transfer, actually. And they just put a few keystrokes in and they move it from registered back into eligible. It's cheaper for them to store it. But it also means that the owner of that silver is not about to sell it anytime soon. And when you move it from registered to eligible, what it means is this person decides is going to hold it for long term. And now we've seen, and everybody on Wall Street Silver has been following this, and rightfully so, is that the amount of silver that's gone from registered to eligible is just absolutely amazing. And where it will stop, will it stop at zero? Nobody knows where this is going to end up. But that's a very important thing to watch. But like I said right at the beginning, as Ted pointed out, this manic in-out silver activity in the COMEX has been going on for at least 10 or 11 or 12 years now. But the stuff you're pointing out, that's just happened recently. But it's just on top of what else is going on in the silver market right now.
And so, Ed, also, what we like to watch here is the inventory numbers at SLV, and those have been in decline recently. And what I think a lot of us have noticed is both LBMA in London and COMEX and SLV all at the same time are in decline. So that poses the question, they're not doing some arbitrage between each other where it goes from one to the other. Where is all this silver disappearing to right now?
Well, there's been more demand for silver than there is supply for quite a long time now, and now it's showing up in the major places like the COMEX and the SLV and the LBMA. And as everybody knows, that this silver is disappearing mostly into India and into China. And also, there's a lot of conversions of shares at SLV. For physical metal, whether that be being sent abroad or whether it's being kept by the owners. But this is something, like I said, Ted looks at carefully. And these withdrawals, it just means that the physical demand for silver, whether it be the retail market that, you guys focus on, or in the industrial demand in good delivery bars, whether it be for investment purposes or industrial demand because, it's being needed elsewhere. It's the demand is just so huge now that they can't hide it on any of the exchanges, and this is going to continue until something breaks, and that it has to be the price at some point. And of course, we're all waiting for that to happen. But it is very noticeable everywhere, as you just pointed out.
I actually have another chart that I think displays this that I wanted to get your take on. Also, Michael's charts that he has on Twitter, and we post them on Reddit regularly. So this is one he puts together of a combination of the COMEX plus London LBMA vault data, and it shows it over time. And you see where the blue arrow is approximately where the silver squeeze began in January of 2021. And right after that, you sort of see this dramatic change in data. And I don't know if that's, just the retail market just picked up dramatically and is built over time, but the vaults are being drained. I mean, everyone, people sort of joke about it on Twitter, poking fun at, oh, the silver squeeze failed. And I would argue the silver squeeze is still ongoing and the data shows it's working.
Well, there's no question about the demand is there. I'll tell you what, I've been around for a while, and the LBMA is the data from them. I wouldn't exchange it for a bucket of warm spit. I mean, I just don't trust. They're crooks. The guys on the COMEX are crooks. These guys, I just don't know if their numbers are reliable or not. But there's no question about it. If you look at that chart, it tells you everything you need to know that, in the last year, demand has really, really picked up. And there's no sign of that abating with or without the LBMA figures, which are probably trending down. Like I said, I've seen the numbers like everybody else. And there's no question about it. It's going down, and everybody is running out of silver that they can safely ship out the door. And one of these days, we're going to see that reflected in the price, but only when the big four and the big eight shorts decide that time is right. And it obviously isn't today, but that day is coming.
Well, the other thing that has really jumped out, and I know you're primarily a silver bug like us, but the gold numbers exiting COMEX have been off the charts. And what I'm showing right now is Mike's chart showing the daily moving average, the 50-day, 100-day, 200-day moving average of gold exiting COMEX vaults. And you can see this is going back 10 years and pretty stable sideways type of action here, up and down, in and out. But something's changed in the past, let's call it 3 or 4 months for gold exiting COMEX. I mean, just dramatic amounts of gold bullion, thousands and thousands of troy ounces per day are being pulled out and I can only speculate, but disappearing into private vaults either in Europe, the United States, or maybe even Asia, because there's a price differential.
Right.
But what are you watching? Is this the preparation for the reset? People don't trust their gold at COMEX and they want it in private.
I'll tell you what, that's pure speculation, but there's no question about it. You got to remember too that I think it was 10 years ago or something like that. I can't remember the exact time, but there was like 25 million ounces shipped into the COMEX in a very short period of time. I don't remember what year that was, but they went from like 12 or 13 million ounces in total inventories in gold in the COMEX up to 30 something million. Okay. And all of these drawdowns that you correctly point out that exist have been going on now for about a year or so, especially in the last 6 months. And almost all of this gold that's being shipped out is disappearing out of JP Morgan's vault. Where it's going, I don't know. I would suspect it's going overseas, whether it's going to the UK or Europe or Switzerland or China, or where it's going, nobody knows. And for anybody to speculate, that would be, I'm not prepared to do that. But there is demand out there for gold, and there is demand out there for silver. And we're all watching these numbers very carefully. What it means for the future, I don't know, but it certainly isn't negative for the price at some point. And all we can do is sit here and monitor this and see what it hatches into as time moves along.
So Ed, the other thing everyone likes to talk about and watch closely here is SLV. And what's developed in SLV recently is the short position has changed dramatically. And I saw even one chart that the lease rates to borrow shares on SLV or pretend to lease silver have increased dramatically in recent weeks. What are you watching right there?
Well, basically, what I'm watching is the most important thing, which Ted watches like a hawk, and that is the short position in SLV. The interest rate, although it's very interesting to watch, and as he's pointed out, is that, as he said, that basically what it is that there's less and less shares available to short because of conversions and other things like that. So, of course, the demand is there. The supply isn't quite as good as it used to be. So it's basically what you're looking at as the rate increases is the supply-demand curve for the shares. So that is not a surprise. But the big thing, of course, is the ever-increasing short position in SLV. I think it was down around, I don't know, 20 million or 15 million ounces about 3 or 4 months ago. And it got up to 30 million and then 35 and then 39 and then 41. And, both Ted and I have been expecting this thing to go down because we've seen some deposits into SLV, but it continues to climb. The last short report showed that there was like over 60 million shares shorted in SLV. And what that means is that, when somebody shorts the shares, let's say 10 million ounces shares, they have to deposit that 10 million ounces in SLV to back those shares, because those shares just came up out of nowhere. Okay. So there has to be the 10 million ounces deposited. And because the silver is not available, or if it is available, it would drive the price to the moon and the stars if they bought it. They short the shares in lieu of depositing the physical metal. Now that's illegal and criminal, and the ETF itself, SLV, shouldn't stand for it. But they've let it get up to its highest point on record, which is like a bit over 60 million troy ounces. And that's obscene. And I know that Ted has written to BlackRock and the SEC, and I can't remember just about anybody who want to listen, that this thing is criminal. It's as simple as that. And the next report comes out on the 26th, which is next week sometime. And of course, all eyes are going to be on what that number is, and hopefully it's gone down. But no, this is another sign of severe physical tightness in the market for good delivery bars, because if the whoever shorting the shares can't get the silver or refuses to pay the price that it's going to drive it up to, they're shorting the shares in lieu of, which means the silver just isn't there anywhere in quantity or in size.
Something else we like to watch is the positioning of the big traders. What is that right now in relation to this market?
In the precious metals, let's just take silver since we're talking about that. It works for gold too. There are thousands of traders, 2,000 or 3,000 traders that trade gold in the COMEX futures market. And but the problem is that there's 8 large traders. Principally, there's the big 4 and the big 5 through 8 traders. The largest 8 traders are short obscene amounts of gold and silver, and it doesn't matter, what the other 1,992 traders are doing.
Right.
When the 8 largest traders are short epic amounts of gold, I mean, they control the price. It's as simple as that. And these are basically the U.S. bullion banks, Citigroup, HSBC USA, Morgan Stanley. Probably some of the overseas banks, HSBC out of London. But it boils down to there's about 5 or 6 banks, 8 in total actually, but the 4 big ones are the ones that control the price. And whatever they decide to do as far as price is concerned, all you have to do is look at what's going on the gold charts and silver charts today.
Right.
They should be screaming higher, but the fact is that they're going down, and that's because these guys are in the market making sure that at the moment, silver and gold aren't safe havens. But what has happened, and we were talking about this on air before we started this interview, was that, as of, Ted Butler pointed out that, the top in the gold and silver price came at the exact same day that the LME nickel contract blew up on March the 8th of this year. That was the exact high in gold, the exact high in silver, and it's been downhill ever since. And what Ted thought is that, the guys who got caught short in LME, I think it was a Chinese company, and JP Morgan was the underwriter for it or whatever, they lost, I don't know how much money, but it was a lot. And basically it blew up the LME. I mean, it has never recovered from that. And will it ever? I don't know. But the message went out loud and clear to anybody who is short gold, silver in large quantities in the COMEX futures market that, it might be time to get their house in order. So since that date, and especially in the last 2 or 3 months, the big shorts, the big four, mostly the big four shorts, have been moving heaven and earth to get out of these short positions and cover them and go long as much as they can. Now, they'll never get completely out, but they're going to get it down to what the lowest possible they can. And the only way they can accomplish that feat is to drive the price lower and lower and lower to make the managed money traders and the other traders on the other side of these transactions to sell boatloads of
interesting.
longs and go short. And that's exactly what they've succeeded in doing. And now we're bouncing along the bottom in price here. But these prices did not get here by accident. They were engineered lower by these big traders in order for them to get out of their short positions. They've succeeded beyond Ted's wildest dreams. And even I look at the numbers, and I've been in this for like 20 some years, and Ted's been in it for almost 40.
Mm-hmm.
And he says that the short position of the 4 or 5 largest commercial traders in silver is the lowest he can remember ever. Gold, it's the 5 largest traders are at their lowest position ever. And in silver, as of last week, they were at their lowest positions ever as well. They're off that by now, but basically we're looking at bottom of the barrel stuff right now, and as these guys have been moving, like I said, heaven and earth to get out of their short positions, and that's why the prices suck. I mean, you take a look at it, interest is down, enthusiasm is down. You look at the hits on your website and all this stuff. People aren't buying in huge quantities when the prices are going down. It's just human nature. I mean, it's my human nature, it's your human nature, it's everybody else that's listening to that. It's you go, oh my God, it's down again. The last thing you want to do is cut a check to and buy silver or gold. But there's some people who should be buying while blood is in the streets. And courtesy of these large traders trying to get out of the short position, that's what everybody should be doing when things are like as ugly as they are today. You got to just get over that and pick up the phone, write the check, send the email or whatever, and buy this stuff, because I can guarantee you that sub $20 silver is going to be a thing of the past one of these days. And you're going to say, gee, I should have, could have, I've just done it. Da, 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 da. We've all been there, done that. Okay. I'll be 74 next month. And trust me, I've been down that road many, many times in my life, and sure as everybody else has too.
Yep, I believe you. And as Willem Middelkoop has said, once it goes, it's almost too late to buy any, because it's all going to be gone in a heartbeat once.
That's exactly true. And I'm just going to add to that too. And I know Willem personally as a super guy. The thing is that the supply chain in the physical market, if you look around at the various bullion dealers that are selling, they got a lot of stock right now. And but the supply lines, I was in the retail bullion business for 4 years, stood across on the other side of the counter from the customer and sold this stuff. And so I know a fair amount about it. And the supply line for physical bullion, as everybody already knows, because we've been through this a couple of times in the last year, is it's 50 miles across, but it's only an inch thick. Okay. Yeah. And once everybody decides they're going to rush and buy the last physical silver out there, right, that's, we're going to be back up to 3 or 4 months, lead times, if you can ever get it at all, because I can guarantee you the commercial users are going to get it before us retail guys. So get it before it's gone. And Willem is absolutely correct.
His phrase is, you got to be in it to win it, because it's too late.
Exactly.
Too late. Yeah. Well, Ed, as always, it's great having you on, and we'll definitely do it again in the future. Thank you so much for coming on and talking to us.
Entirely my pleasure, and have a good day, guys.